We are going to make trading simple and secure again.
Let's start by having a look at the history of trade. We used to have this for that.
The local market. Simple,
Secure.
instant, trusted. Then that got substituted with money, which made a lot of things possible.
Like exchange between marketplaces.
Exchanging big goods and small goods.
Buying now, selling later.
However,
Not having this and that at the same time, in the same place.
Has brought a whole new set of risks with it.
To manage those, an exhaustive amount of control mechanisms.
regulations.
Supervisions.
And documented requirements.
has made things more and more complex. Still,
There is significant financial risk.
Uncertainty in the market
Low trust.
and high transaction costs.
this is where financial markets are today.
This is what the world economy runs on.
To us, it's obvious that this can be done better.
Trading should be as easy as this for that again. It should be secure.
Simple, instantaneous,
Global.
and we're going to make it just that.
At SDX,
We know that the future of value exchange,
Is in fact digital.
Technology has evolved.
And we think it's time for trading
To evolve with it.
That's why we are building the infrastructure for this next evolutionary step.
Because we are too Swiss.
To leave this step to chance.
We'll take it into our own hands.
What do we mean by Swiss?
We mean Swiss, as in history of disruption.
Swiss.
as in tightly regulated.
We mean Swiss as in strong, stable, and solid.
As a globally leading marketplace for serious business.
That has the commitment of the world's most innovative country behind it.
so, the people who brought electronic trading to the world.
The people run the Swiss National Bank's payment system.
The people who handle every step of the Swiss financial marketplace, end to end.
These people.
Us.
Us. We're going to change the world for good.
We're embarking on a journey.
To bring you
To bring you
Digital.
Good morning, everybody. Thank you very much for having me here. Thank you to the organizer for giving me the speaking opportunity. I would like to introduce SIX to you. We have a vision at the SDX, and that's being a global digital marketplace. But before I talk in detail about SDX, I would like to introduce quickly SIX. SDX is a 100% owned subsidiary by SIX. SIX is basically the market infrastructure of Switzerland. So SIX as a group is owned by the Swiss banking industry. We operate the Swiss National Stock Exchange. We have the Swiss CCP, the Central Clearing Agents. We have the CSD, that's the Central Security Depository. And at last, we also operate the infrastructure, the payment infrastructure for the Swiss National Bank. These we call the Swiss value chain in terms of financial market infrastructure, and SDX will bring this to the blockchain. Why does established company like SIX look into a blockchain model? We have realized that there is a new model in the market, a digital model. While SIX comes from a very traditional model, from the standard Swiss banking industry, we have seen that there are new market players in the digital models, like Binance and Coinbase, as an example. And those players have become more and more regulated in the recent years. How they do that? They partner up. I mean, for Binance, they do work together with Malta. For Coinbase, they bought the broker-dealer license in the US. And we have realized that also investors are interested in this new digital model. So companies which will listen, they do ICOs or security token offerings. And while in the initial part these were only startups in the crypto world, we have seen more and more companies being interested into moving into this digital model. So as SIX, as the global financial market infrastructure provider for Switzerland, we have decided that we want to offer these digital models to the regulated market. So SDX will be fully regulated with 2 financial market infrastructure licenses, with a CSD license and an exchange license, very similar to the traditional world. And we will operate business-to-business model, so our customers will be the banks and the broker-dealers, as is required with a financial market infrastructure license. What is our vision? What is our ambition? We want to have a global reach, because these models are not regional anymore. They are global. Even so, regulation is still regional. We believe this will outgrow, and dependent on the market, we will open regional offices in the future as well. We believe that all assets can be digital assets, no matter what. That includes as well non-bankable assets, which can move into a digital model. And if you think about the value of non-bankable assets and making them bankable, that's a huge business. We will offer the full value chain, from issuance to trading to custody. As I mentioned, a B2B model, and of course fully regulated. What are the use cases at the moment, the focus we have to start with? We have use case around digitalizing bonds. So classical security, which with the digitalization you can make it more transparent, and more importantly, the post-trading part you can fully automate. Funds, our second use case. There the cost cutting and the possibility in the future is even more, because if you think today, the cost of operating a fund, the cost of paying a fund manager, the cost of calculating an NAV, the cost of supervising investor restriction, all of this in a digital model can be automated. The equity use case. The equity use case is basically your ICO or STO. We call it initial digital offering, which is a merger between the current regulations in an IPO and the technology from an ICO. And last but not least, the storage use case, the custody use case, to store all kinds of assets as wallets. Basically, what we want to build is an ecosystem. It goes beyond an exchange. We have tried to visualize this ecosystem. So if you look at the red part, that's our classical CSD, the fully regulated ecosystem, like we have for all security today, which are under an FMI, financial market infrastructure license. Additionally to that, we will provide companies to use our network, which is based on Corridor 3, as a service. So we call it network as a service, where we offer notary service, which SDX will be a regulated party to ensure the trust. We also will be able to connect into non-bank assets, where we work together, where we teamed up together with a technology provider, which develops, for example, mini HSMs, which you can stick to real goods, so that you can transact digital twins on the blockchain, which makes it much more efficient, much cheaper than if you go through the classical way. Let's give you an example. If you have a picture, so you own a Picasso, and you want to transact this Picasso, you can put a mini HSM on the back of that picture. The HSM is able to realize if it's removed. And so, unlike in the current market, where you always have to go to certification if you want to transfer such a picture, this has only to be done once the HSM is attached to the back of the picture, and afterwards it can be transacted in a much more cost-efficient, in a much easier way, and obviously it can be fragmented as well. So depends on the offering and for what you want to use that picture, you can either own it and just transact through it, or you can fragment it and trade it in much smaller pieces, so that any investors can start transacting, buying or selling this because obviously in the current regulations this will be in a separate market, in our less regulated market because there's no qualified as a financial market infrastructure as a CSD instrument. The last thing we offer is connectivity to other networks. We believe it's very important as an exchange and as a CSD that we are open to other networks. So from a technical perspective, we have first connectivities. Obviously it will be much more driven by the regulatory perspective, if we can connect to a third network or not. And obviously it's also driven by the consensus mechanism of that relevant network. Where do we see the advantages? From a financial market perspective, the advantages are very simple. The creation of assets and the listing of assets, given these new markets we also tap in, will be having a positive revenue case because the asset market is going to be much wider, given we can add non-bankable assets as well. In terms of transacting those assets, obviously given the whole universe is bigger, there is going to be more assets transacted, and we will have a economic swap as transactions, so instant trading and settlement, compared to today's world where you have a transaction traded and the settlement happens 2 days later. Both of those legs will be married together in one leg. So pretty similar to your Starbucks coffee, where you order and you should get the coffee immediately. This is what this trading will be. So the settlement and the transaction happens at the same time. This takes massive risks out of it because in most markets today, this is collateralized either directly between the parties, these 2 or 3 day settlement differences, or through a centralized settlement agent, the CCP. So given the more assets you have and given the reduction of costs, this is going to be having a revenue and a cost risk impact, a positive revenue and a positive cost risk impact. Then the smart contracts, you probably have heard about that. That's nothing else than optimization of corporate actions, for example. The big difference to today's world is while today there are many players in it, and each of the player has a small part of the cake and automizes that. That's an end-to-end optimization you can do, and you only have to do it once because the blockchain is distributed, so the assets are distributed. While today your custodian has an optimization, and the sub-custodian has an optimization, maybe the bank has an optimization, and maybe the bank uses another bank's where it holds the asset, has on top of it an optimization. This now is going to be end-to-end, which will reduce costs tremendously. And last but not least, the security layer, given it's distributed, we believe the security is much higher than today, where CSDs hold everything fully centralized. Where do we see the advantages and why SDX can be successful in it? I mean, for us the big advantages is data. It's a single data source. This allows optimization, which has a huge impact on cost, risk and liquidity. Risk is going to be decreased and liquidity is going to be increased due to the fact that we can transact in smaller amounts as well. Last but not least, the asset universe, which is going to be much wider. Why can SDX do that? We have an international reach. I mean, SIX Group is for 100 years already operational. We know the full value chain end to end, so this is not a new topic to us. We have a pure business-to-business model, so we include the banks. We believe for an adoption, it's very important that investors have a very simple way of access, and last but not least, we are fully regulated. I hope this answered a couple of questions. If you have any questions, please raise them now, or I will be happy to answer them afterwards during the day. Any questions? Okay, thank you very much.